What's happening in U.S. markets today? Why is the market down today? U.S. stock indices have tumbled. Dow down about 1.2%, is almost equal to 542 points. S&P 500 off 1.6%, 101 points, and Nasdaq down 2.2% for 72 points, primarily due to a weak July jobs report and newly announced tariffs set to begin August 7th. The Times of India, +7. AP News, +7. New York Post, +7. Jobs report shock. Only 73,000 jobs were added in July, well under the expected 100,000, with May and June revised downward by over 250,000 total, raising concerns about economic slowdown and forcing analysts to reevaluate Fed policy. Business Insider, +4. AP News, +4. The Guardian, +4. Trump tariffs fallout. President Trump signed sweeping tariffs on imports from 66 to 92 countries, with rates between 10% and 41%, e.g. Canada now 35%, others as high as 41%. These trade tensions rattled investor confidence and triggered sharp market sell-offs. The Economic Times, +12. Business Insider, +12. Barron's, +12. ABC News, +2. Reuters, +2. The Economic Times, +2. VIX and bond market reaction. The VIX volatility index surged 22% to around 20.38, while Treasury yields rallied, particularly the two-year yield falling sharply, signaling heightened risk aversion and growing chances of a Fed rate cut in September. The Economic Times, +14. Wall Street Journal, +14. Business Insider, +14. DJIA futures and Nasdaq today. Dow futures, as well as S&P and Nasdaq futures, were down in early trading by roughly 1% or more ahead of the open, reflecting pessimistic sentiment in response to tariffs and jobs data. Barron's, +11. The Economic Times, +11. ABC News, +11. Chart decreasing indices overview today. Index movement notes. Dow Jones Industrial average -1.2%, 540 PTS. Weak jobs and tariffs weigh heavily. S&P 500 index -1.6%, 101 PTS. Broad market sell-off. Nasdaq Composite -2.2%, or 72 PTS. Tech-heavy index hit hardest. DJIA/Dow futures slumped 1% plus futures signaled poor open. VIX volatility index +22%, 20.4, indicates rising investor stress. Compass broader business and finance trends. 1. Trade policy turmoil. The resurgence of Trump-era tariffs marks an aggressive shift in trade strategy. Investors who previously bet on a taco trade, Trump always chickens out, have been blindsided by enforcement that seems more formidable this time. Tariffs threaten supply chains, corporate margins, and raise inflationary risks across many sectors. Wikipedia, +7. Wikipedia, +7. New York Post, +7. Business Insider, +7. ABC News, +7. New York Post, +7. MarketWatch.com, +1. Finance.yahoo.com, +1. Barron's, +15. Business Insider, +15. The Economic Times, +15. Wall Street Journal, +1. New York Post, +1. 2. Weakening labor market. The sluggish labor data, notably the 73,000 new jobs figure and large downward revisions, suggest creeping weakness in the economy. A consistent slowdown in hiring, even amid modest wage growth, raises fears of stagflation or recession risks. The sudden dismissal of the BLS head has also shaken investor confidence in data integrity. AP News, +2. Wall Street Journal, +2. The Guardian, +2. 3. Market volatility and sentiment. Volatility is sharply up as bond yields fall and capital shifts into safer assets like treasuries and gold. The VIX surge underscores investor anxiety, even as some economists remain cautiously optimistic about a year-end S&P 500 target around 6,500. Business Insider, Business Insider. Barron's. 4. Corporate earnings and tech dynamics. Although giants like Microsoft, Apple, and Meta delivered strong quarterly results, their performance couldn't offset broader macro concerns. The disconnect between strong tech earnings and weak economic signals speaks to a bifurcated market. Barron's. Brain outlook. What to watch next? Will August 7th tariffs trigger supply chain disruption or stoke inflation? Will the Fed respond with a rate cut in September? Can trade negotiations or deals emerge to ease tensions? Will labor data improve in coming months? Could market sentiment rebound if economic indicators stabilize? Writing hand summary story. As of today, August 1st, 2025, all major U.S. stock indices, Dow, S&P 500, and Nasdaq, are sharply lower. The catalyst, a weak jobs report and escalated tariff policies by the Trump administration, which triggered investor panic. Futures markets remain fragile, volatility spiked, and sentiment has soured despite pockets of strength in tech earnings. Analysts are now bracing for the possible fallout from a trade-driven slowdown and recalibrating expectations around Federal Reserve policy. While some forecasting models still see modest S&P upside by year-end, uncertainty is dominating near-term trading.